What is up, people? Miles here with Keep the Change, and today we are talking about Momo stock because their earnings just came out, their quarter three earnings, so I figured that we would talk about it. I talked about the stock a couple months back. I said it was the most undervalued stock I had ever seen. So, do I still think that this stock is extremely undervalued, or is this kind of a value trap? Let's find out. Back when I first talked about Momo stock, it was at $14 a share, and here today it's pretty much at $14 a share. It hasn't really moved. So Momo today is a smaller company. It's got a market cap of around 3 billion, so not that big. And what it actually is a Chinese social media app, and it connects people you have interest with. You can chat with them, or you can watch live streamers, and that is actually where the bulk of their revenue comes from. This is kind of like Twitch, where if you're watching a live streamer you like, you can tip them, and then Momo will actually take like 50% of that tip, and that's how they make money on the live streaming side of their business. So that's the Momo app, and that's where the majority of their revenue comes from, live streaming. However, they also have the Tantan app, which is basically like the Chinese Tinder. And Momo stock has a PE of 8 and a forward PE of 8 as well. So that's just like insanely cheap, dirt cheap valuation right there. And that would kind of give you the impression they're on the brink of bankruptcy, but that's not the case at all, because Momo has over 2 billion in cash, and that's US, and they only have 1 billion in liabilities. So they could pay off all their liabilities with all their cash and still have a billion left. And when you put that into perspective, considering the fact they're only a $3 billion market cap company, the fact they have 2 billion in cash, that's awesome. That's amazing. But that must leave you with the question, why are they so undervalued? Why do they have a PE of 8? And that's a really good question. I think a couple reasons. The first one, obviously, is that they're a Chinese stock. Now, Chinese stocks tend to get a pretty bad rap, which kind of makes their valuations a lot lower than US ones, as people don't think they can trust the accounting, or maybe there's some scams going on. And I will say, this is a fair point and a fair criticism. Whenever you're buying into a Chinese stock, there's always the risk that they're faking the numbers, they're cooking the books. But with Momo, I don't actually think they're doing that, and here's a couple reasons why. First off, they paid dividends this year, proving that they do have cash, and then they also bought Tantan back in 2018, and that was around a $700 million deal. And last but not least, they're actually doing a share buyback program, so they're going to buy up to $300 million worth of their own shares over the course of the next year. These buybacks actually tell us two very important factors. One, that Momo thinks that Momo stock is cheap, right? Why would they buy their own stock right now if they think it's going to go down in the future? That would just be really stupid. And second off, if Momo buys their own stock back, their EPS is going to look better, the stock price is going to go up. It's just generally a really good move. And the second reason that they're so insanely cheaply valued is the fact that their business got hit really hard by the pandemic. And we'll look at some specific numbers in a second, but just for some context, they actually had a share price of $40 back in January, right before the pandemic hit, of course, and then now, today, they're at $14 a share. That's a decrease of 60%. And they went from growing revenues before 2020 to in 2020 having revenues decrease around 9%. Do you think it's fair that that warrants a 60% stock price drop? That seems absurd to me, because Visa, if you look at them, their latest quarter, their revenues went down 17%, and the stock is doing all right. It's not down 60%. And the entire reason that the revenue is down and they got hit so hard by the pandemic is basically the way they make money, right, is from people tipping for live streamers. And the biggest tippers on the Momo app by far are basically small business owners who obviously their business got extremely hurt during the pandemic. So Momo was going after small business owners for the majority of their revenue. That class got hit. Now they got to move on to the bottom layers, right? The middle class and the working class. So to actually find out how much this impacted them financially, let's look at their third quarter earnings. Third quarter revenues declined by 15%, so that's obviously not great. They made $554 million, and out of the $554 million in sales, they actually kept $67 million as profit, which is not that great because last year they made pretty much double that. If I'm gonna be honest, guys, these numbers are terrible. They are trash, okay? Don't get me wrong. But at this moment in time, Momo's really trying to just get its footing back, get its head back in the game, okay? Zac Efron. All because they have to change the structure of the entire business. I mean, if you think about it, the small business owners not paying as much, that was like their biggest thing going for them. So now they kind of have to regroup, rethink. And according to them, this quarter, they actually were doing kind of a turnaround. So they're starting to get this company back on track. And I will say there was some stuff I did like on the earnings, like the fact that they had their monthly active users up from last quarter. Last quarter, they had around 111 million monthly active users on the Momo app. This quarter, they had 113, so an increase of around 2 million. And if you look at that on its own, it does not look that great. However, However, in the greater context, Momo has been losing monthly active users or just having them flat. So the fact that they're actually growing them is kind of a good sign that the app is back on track here. Tantan is actually doing really good. Their revenues are up over 100% year over year to 100 million for the quarter. And Tantan was that Tinder app that we were talking about earlier. So basically their Chinese version of Tinder, their revenues grew up 100% during a pandemic, which is kind of impressive. I've got to give it to them. They also grew value-added services up to 196 million for the quarter, and that's up over 25% year over year. And all that segment really is like membership. So, Tinder Gold, like Tantan Gold, or if you want to send your friends stuff on Momo, you can kind of send them money through virtual gifts. And that makes up around 20% of their revenue and is actually growing at double-digit rates. So that's pretty decent there. Taking a deeper dive into the profits, we see that they had 67 million US for this quarter. The Momo app brought them $85 million in profit, and then the Tantan app actually lost $17 million for them. Now, Tantan has not been profitable yet at all. However, they lost 17 million this time, and this time last year, they actually lost over 30 million with less revenue too. And all this means is that Tantan's revenue is going up at a pretty decent rate here, and its losses are also going down at a decent rate, which eventually is going to turn a profit and is going to help Momo out a lot with their net income. And just think about it, right? Logically, I mean, Momo, the app, they made 85 million, Tantan lost 17 million. If instead they made 17 million, then the Momo net income would have been over 100 million for the quarter, which is obviously amazing. That's where they want to be. The live broadcasting revenue this quarter was down 27%, and that's the majority of their business, so that's why the revenue was down 15% overall. And their broadcast revenue being down so much was actually expected. It's not the greatest thing in the world, okay? I'm not going to sit here and lie to you, but at the same time, everyone expected it. However, one thing kind of rubbed everyone the wrong way, and that was their guidance, which was horrific. Just terrible, dreadful. They said for quarter 4 2020, they're going to have revenues decline 20% year over year. Analysts had them at around a decrease of 12%, so that's very bad, okay? That's terrible. I'm not going to lie to you. And honestly, that really made me mad too. I'm not even going to lie, because this company has so much going for it. It's got a really cheap value, it's got a ton of cash, and is insanely profitable, immensely profitable. But at the end of the day, none of this matters if the revenue isn't growing. That's what people want to see in the stock, and that's what's going to make it shoot up in price. And if revenue continues to decline or stay the same, then that's what's going to happen with the stock price, quite frankly. So all it boils down to at this point is, can they get the growth back in the company? And I think they can. I'm optimistic. I'm pretty sure that next quarter is going to be one of their worst quarters, hopefully. Okay, I really hope. And I think it'll be bad because they're restructuring the app. There's a new CEO. There's a lot of changes all at once. However, overall, I think it's a really good thing for the company. Also, the fact that their user base is coming back, even if it's slow, it's still growth to some extent. And also Tantan growing fast as an app and its revenue, hopefully that should be able to boost their growth in terms of sales. And then value-added services also kind of coming in with that nice double-digit growth to sort of balance it out. But at the end of the day, guys, this stock is a total turnaround play. You can't expect to buy this and have it jump up like 100% in the next day or something. Now, it is volatile, so anything's possible, but in my opinion, this stock is going to stay relatively flat for quite a while. I don't think there's much lower they can go from here, to be quite honest. I could be wrong, you never know, but in the same sense, I do think the upside is a lot bigger. I think this company in the next year, maybe the next 2 years, could actually really turn the business around, and if they do that, then this company is going to skyrocket, or the stock rather. So in my opinion, if they slowly turn that business around, the stock price should also go up as well. Make sure to do your own research before buying, but I think this is still a pretty good undervalued stock. Now, I really do want to see next quarter because I want to see the guidance on that in order to get a good picture of where they're coming from now, but I still think it's good. So yeah, thank you guys so much for the support. Thank you guys so much for watching, and I love you.